right, so let's start with the big story that we are tracking on WION. So as odds of a global recession rise, governments and central banks around the world are racing to fend off the economic damage from the spread of the novel coronavirus. The death toll has already landed hard on the jittery financial markets. The IMF and the World Bank have also predicted a considerable slowdown in the growth estimate for the year. And the markets have got spooked. The markets in early hours of trade this morning have been down. The Nikkei, for instance, has been down by nearly about 579 points, a little under 3%. The Hang Seng has been down by 619 points, almost about 2.31%. The Kospi in early hours of trade was down by 45 points. And also the Indian Sensex has been down almost as much as by 1,000 points. And to discuss as to what is happening in the markets around the world, we're joined in by Dr. Suyash Bhatt. He's joining us live from the United Arab Emirates. He's a senior lecturer at the Emirates Institute for Banking and Financial Studies. Thank you very much indeed, Dr. Bhatt, for joining us on this broadcast from WION. And let me begin by asking you this. You know, looking at the impact of the novel coronavirus infections that have spread around the world, you know, how badly are we looking at in terms of its impact on the economy, and for how long do you think this downward trend in the economy will continue?
Good afternoon. I believe the way things are going, it's not a short-lived event. I think it is going to have a deep impact in coming 2 to 3 quarters, and all the estimates that you're seeing from the IMF or the World Bank and the way Dow Jones is reacting, it's all in anticipation that if people don't go out, if people don't purchase goods, if people don't travel, if people don't buy these products that are made in China, because there's also a fear that the products that are made in China, if you import them, you may also get affected by coronavirus, though it was something which a lot of people got worried about, and a lot of containers were not unloaded from the port. So all of this has a deep economic impact, and you don't see this going until there is a problem which gets solved at the main source, that is China. So if you see out of these, most of the cases that got reported, all of them are still in China, and though the number of reporting of cases have gone down in China, but the magnitude, if you see, it's huge. So once it gets resolved, maybe not anytime soon, maybe in next 1 or 2 quarters, it would to completely eradicate this. I think it would take more than 3 to 6 months in China. And once you see that, and then the aftermath that you're seeing in other countries, I think this entire year is 2020 is going to be a difficult year, because the entire supply chain of business, the entire buying and selling of goods, everything has got affected. In Dow Jones, if you see, companies like Ford, companies who have a huge manufacturing base in China, their stocks have fallen for more than 10 to 15%, and there's a reason to that. You have shutdowns in factories, so how are you going to produce goods? And second, there's a fear amongst people. So travel industry, manufacturing, all of this is going to get affected very badly.
Absolutely, indeed. And if you were to look up, there are certain industries, for instance, tourism and aviation, these have borne the brunt of the coronavirus infection up front. You know, is this something that will be incumbent in terms of how quickly the world is able to get its act together and try to contain the spread of the coronavirus? Will we see the economy going downwards still then?
So one thing is about the virus and the human aspect to it. So I think that to a great extent, I think you should commend the way the Chinese government locked down the entire city. Imagine after doing that, if it is spreading in so many countries. Imagine if they would have not gone down and shut down the city, what would have happened? So I think the human side, I think, is being handled pretty much well by most of the governments. But the economic part, I think, markets and economies always work on assumption and future. So if we see the way trends are going right now, you would find that this would have a deep impact, because the earnings forecast we're all on basis that we are in a recovery phase. So this happen anytime soon. Even if the Chinese government cuts rate, even if the Federal Reserve cuts rate, people don't have confidence to spend money. So if they don't, then you will be seeing a deep impact. And that's why it's a very interesting observation that in US, all the stocks which would, if a person sits at home, what do? You see Netflix, you see maybe you do shopping on Amazon. So all these stocks are going up, but all the other travel, tourism related stocks are going down. So that's also something very interesting that you're saying. So some may benefit out of this, right. Some may not, but in general, it's a big problem that you are seeing especially in a time where there's a slowdown globally. So I mean, it's not a good news.
I think that's an interesting observation that you made of the mixed fortunes, where some companies are losing, like for instance in travel and aviation, but stuff like Netflix, they appear to be gaining, at least on the market front. But Dr. Suresh Bhatt, looking into the future, because that is also something that a lot of economists intend to do in terms of predicting as to where we go from here. If the situation continues like this for another quarter, are we staring at a possible recession?
So last time, I think if we go by data, I think last time when SARS was caused in 2002 time period, the Chinese economy, slowed down by 2%, and the global economy had an impact of close to 0.5%. But now the magnitude at which China works and the global economy, I think you are going to see a slowdown of 0.5 to 0.7% in the global economy. Slowdown in the global economy. So that's something which you would be seeing. So we will be seeing a slowdown, but I'm not too sure whether a recession would happen or no. But yes, slowdown is something which we would be seeing technically across the world.
Right, and also just before we let you go, Dr. Bhatt, the Indian markets are down as well. Sensex is down by almost over 1,000 points. Do you think this is the impact of the novel coronavirus outbreak that actually has spooked the Indian markets, or is it more to do with the Yes Bank crisis?
I think you got it right. I think in India, one is coronavirus fear. So fear-mongering does affect market sentiment, but I think it has more to do with the banking sector problems that you're seeing. And it's since last 2 years, we are seeing that, the fall of, it started with DHFL, then Carvey, and, one by one, the way things unfolded, and now Yes Bank. So the kind of move that RBI came up with the moratorium, putting a restriction of not withdrawing more than 50,000, I think it's a cause of concern, because it used to be one of a premium stock, and there are many people who have accounts with those banks. So it's a real fear amongst small investor, retail investors. So this will accelerate more fear amongst the retail participants. So I think the Indian markets are reacting to the systemic, reasons more than coronavirus. I think the banking sector is giving a lot of pain, and I think there's more to be seen, because it's not just Yes Bank. Imagine if this kind of restrictions are put, all those corporates who have deposits with Yes Bank, all those corporates who have taken loan from Yes Bank, all of them, it's a mess that is just getting to started to unfold. So you're going to see much more pain in near future.
All right, we'll have to leave there. Thank you very much indeed, Dr. Suresh Bhatt, for joining us and getting us all those insights in terms of what is likely to be the economic impact.